Hello everyone, this is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you my North American opening market comment for Thursday, August 25th. We had some mean reversion during the European morning today. The dollar was down and the euro was up. The single currency gained despite a surprising fall in the IFO indices, which had been expected to rise. The pound was also lower against both the dollar and the euro, which makes me think this is more about positioning and profit-taking than anything fundamental. The big thing in the U.S. today is that the Fed symposium at the resort town of Jackson Hole, Wyoming begins. Central bankers and academics from all over the world gather for 2 days of discussion. Some of the speeches and comments by senior officials may move the markets. The one everyone is waiting for, of course, is tomorrow's presentation by Fed Chair Janet Yellen, but other people may have something important to say before then, too. As for the indicators, the U.S. announces durable goods for the durable goods report for July. Now, durable goods have been in the doldrums for quite some time, and this month is expected to be the same, as you can see from the graph. The bars represent the actual figures, while the dots represent the forecast. You can see that the headline figure, the blue dot, is expected to bounce back after the very weak number the previous month, but the core figure, the yellow dot, non-defense capital goods excluding aircraft orders, is expected to show only a small rise, as usual. In fact, it could even be lower than in June because there was a huge spike in oil drilling equipment orders in June that's unlikely to be repeated. I suspect, though, that most observers have given up hoping for much from the durable goods series, and its impact on the FX market may be fading as a result. Then overnight we get the Japanese inflation data. This is the last inflation data before the September Bank of Japan policy meeting, and so it's quite important. The Bank of Japan is carrying out a comprehensive assessment of its policy and its effect. The results of this assessment will be discussed at the September meeting. If the inflation figures show, as expected, that Japan's inflation is in fact slowing, then the Bank of Japan will either have to A, decide that its policy is hopeless and give it up, or B, increase the stimulus. Personally, I think they should decide it's hopeless and give it up, but that's probably not the way that bureaucrats think. Therefore, a further slowing in inflation is likely to be negative for the yen. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.